Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. Are my specs looking a bit hazy? Maybe they are. Nevertheless, I can see them well. Okay, welcome to Indian Open. I'm Neeraj Shah and let's go straight to the headlines at this hour. Donald Trump gets set to meet other G7 leaders face-to-face for the first time after imposing tariff on aluminum and steel imports. Interim Finance Minister Piyush Goyal will meet PSU bank chiefs today. On agenda is the consolidation roadmap of state-owned banks. India may delay its first ever auction to build solar factories after China's pullback from state support for power projects is expected to lead to sharp drop in equipment prices. Reliance Industries may be preparing to list its consumer business, with Chairman Mukesh Ambani saying they have crossed a meaningful threshold. Okay, in between all of those headlines and me trying to clear my specs, let's give you a set of the trade setup for the day. Doesn't look like it'll start off on a good note. Yesterday, though, was a fairly meaningful day. Last 2 days have been fairly interesting for the markets because we have inched up higher in line with what the global markets have been. So the Indian markets have essentially mirrored the rally in global markets on consecutive days. The Nifty Bank has ended off the highs on the weekly expiry day, but most traders that we spoke to yesterday mentioned that this is not a point of concern. They would probably they would have anyways expected volatility on the Bank Nifty weekly expiry day. The key to test would be today. Seems like we'll fail that test, but let's wait and watch. The good part about trade yesterday was that a clutch of quality names hit fresh highs in trade yesterday, 52-week highs. So First Source, VIP, Britannia, JSW Steel, Bajaj Finance, Grove Finance, a clutch of those names which hit 52-week highs. For a long time now, in the last 4 or 5 sessions, we haven't seen meaningful names come up and hit those 52-week high screens. Yesterday, there was a fair sprinkling of those names. The flows, though, weren't the most convincing. DIs pumped in about 1,200 crores, but FIs a reasonably large 525 crore figure. We haven't seen too many of these large sells in the last few days. Provisional at that, I might add. But yeah, there's some bit of selling that happened in some of these stocks in trade yesterday, and therefore the FI number looked a bit negative. The global markets, though, pointing towards how the screen is set to start off. So Nasdaq was the principal culprit because tech led Nasdaq lower while Dow ended in the green. But Asia is taking off from those cues. Europe wasn't the strongest. Asia isn't looking the strongest. The SGX Nifty is pointing towards a downtick as well. Now, the quantum of the cuts we still don't know, but suffice to say that we'll start off on a negative note. Just monitor the global cues as well. The Fed and the ECB meets will be monitored next week, but the mood by and large seems to be cautious in the global markets ahead of statements from the G7 meet as well. So let's wait and watch what happens. Today, we might mirror all that the global markets do because, frankly, there are no individual cues from our markets that could lead the markets either lower or higher. So let's wait and watch what the global markets are doing in the session today. Amongst the things to watch or the stocks to watch, there were some fresh long positions built in select PSU banks in trade yesterday. Let's wait and watch whether the likes of Indian, Canara Bank, etc. do react or no. Some more stocks under the additional surveillance measures. I must add, though, that it's losing its sting for a bit. So these 3 names come into play. But yesterday, remember, Action Construction Equipment placed under the ASM list, ASM category, it didn't really materially move the stock, just about 1.5% lower. So now the bark is now more bigger than the bite, really, for some of these names. I tried to scan some of the brokerage notes. There was an interesting one, Ventura Securities, not a large brokerage, but typically when they come out with those small cap, mid cap names, the stocks have tended to react in the past. And let's see if Bike Hospitality reacts, because Ventura believes there is a potential upside of over 106% over the next 24 to 30 odd months. In a day like this, you doubt that there will be a big reaction, but let's wait and watch. And then watch out, a clutch of other names doing the rounds. There's a newspaper report about how the minority shareholders in Century Textiles might be questioning the Century Textiles Ultratech deal as well. So let's wait and watch what happens to all of those names. Difficult to say, really, but just to keep in mind that monitor all of these. And remember, our research team will be talking about all the key stocks and news a bit later on in the show. But as is the norm, we start off with first word. Let me tell you what's lined up on First Word today. It's the collection of the top editorial stories that we believe we should present to you first up on the show. Is Mukesh Ambani hinting at listing Reliance's consumer businesses in this year's annual report? Sajid Johnson to tell us why that may be the case. Shrimp exporters have lost favor with investors this year despite rising exports. Somit tries and tells us why. No such worries for luggage makers though, who are packing in the gains. I'll just weigh in a bit about what's really working for some of these luggage makers, 2 or 3 players really. And then Jayesh and Yatin join in to tell us why Tata Motors may be turning around the corner. What is in it for bulls? We'll try and dissect that piece as well. However, the big news and Reliance Industries may be looking at listing its consumer businesses. That's the key takeaway from the latest annual report. Not that the group chairman Mukesh Ambani spelled it out in his message to shareholders, but there were some hints that were thrown in. Now, Sajid Mangat here's to take us through all of these indicators. Frankly, I don't know of no one better to dissect Reliance Industries than Sajid. And Sajid, very good morning.
Good morning.
What did you make of reading that vast annual report?
Well, it's a vast annual report because you have now 2 critical businesses which are reaching threshold, which is Reliance Jio and Reliance Retail. Together, they have a revenue of nearly $14 billion. Now, that's a threshold which, at which point any company would look at to unlock value. But, going into the letter of Mukesh Ambani to shareholders, now he very clearly states that these businesses have attained threshold to an extent that they will start contributing significantly to the profitability of the group. Now, that's something, an indication which I believe that is pointing towards that there would be some kind of public issuances coming in, because in the past few months we have heard, we saw Bloomberg also putting out a story that Reliance is talking to bankers for Reliance Jio IPO, and Reliance Retail is also now big enough because $10 billion in revenue for Reliance Retail, and it's growing. Last year it grew, it nearly doubled from the previous year. So that's something which is there. And in the past, whenever shareholders have asked about what is the plan for Reliance Jio and Reliance Retail, whether he will demerge or whether he will unlock value in these entities, he has always maintained that let them achieve a size and scale and threshold, and then we will take a call on it. What Ambani has indicated in his letter to the shareholders is that now that stage has arrived. If you look at the growth pattern of these 2 businesses, in FY18 they were around $14 billion in revenue, and they both were profitable, good EBITDA and good profitability. Now that is expected to nearly double in FY19 for them. So together we are looking at, if retail continues to grow double every year, the CAGR has been around 45% for retail, and the last 2 years has been very high growth. Then we are looking at nearly $20 billion of Reliance Retail, and nearly $8 to $10 billion of Reliance Jio in top lines. So that's nearly $30 billion of business which will be there, and it's ripe to unlock value. That's what, because at the end of the day there has been a lot of money spent on these 2 businesses, especially Jio, and the shareholders would like to get some return from those investments.
Yeah, Sajid, a couple of questions, actually two more questions really. One, I also want to know about what Mukesh Ambani had to say about what the overall business outlook looks like, keeping in mind that it's a global business, a lot more global a business than local only. But just one quick word on the 2 points that you mentioned. In the last few quarterly numbers that we dissect, retail was almost a forgotten entity because Jio took center stage in the minds and the perception. Somehow the last quarter, the numbers for retail also looked fairly promising for the year and maybe for the quarter as well. What sense do you get? Do you think that looking at the commentary and looking at the sizes, that we might be looking at some bit of listing probabilities in the current financial year itself, or is that difficult to say?
Well, the timing is something which Ambani will have to decide.
Of
right?
course,
right?
no.
And he knows best when to bring this business to public. But what we are trying to say here is that the businesses have reached a scale wherein public listing is inevitable, or at some point in time generating shareholder value is inevitable. the capex cycle of the company ended last year. The company came out with 1:1 bonus at the AGM. That was a way of rewarding shareholders. Now the investment which has gone into these businesses, especially Jio, and the kind of investment that is required going forward into Jio, will require more capital, and public markets would be the best placed to get valuation and capital for Jio. As far as Reliance Retail is concerned, the kind of investment was initial in that nature, and they've been generating a lot of cash flows there. But the kind of aggressive growth that it has undertaken, it's something which it's you cannot express it, because look at the numbers which will give you a thing that it nearly doubled its revenues in 1 year, from 13 million square feet to 17 million square feet in a year's time, and they're talking about how aggressive they will be going forward in the next 2 to 3 years, because they want to have a large pie of the organized retail business. And that's coming in at the time when you have online players like Amazon and Flipkart getting entry into India. So it is going to be a very aggressive expansion, and
they need a war chest for that.
And they need a war chest. And this group has been very very frugal about how to use the capital and generate return, unlike any other group. And so if you are going to put the capital, they will ensure that they get a good return on it as well.
Okay. One last question. What about global outlook? What did he have to say?
Well, he's been very bullish on global outlook. He's saying that all countries are now growing in sync, especially the developed countries, and that's creating demand in globally. But the only risk which he has red flagged is geopolitical tensions and the protectionism which is coming in, and those may be the hindrance to growth. Otherwise, he's saying that we saw sporadic last year. He said we saw sporadic growth in various regions, whether it's US or Europe. Now it seems to be a growth in sync, and every country is growing. So that's a good sign for it. And in India, he's saying the GST regime has brought in changes, and that has benefited retail as well to some extent, because it has created much more seamless flow of goods and services. So he is pointing towards a better growth trajectory in India, but also looking at, he's saying that there's a tailwind with respect to global growth which is coming.
Yeah, I saw that in the story that's been filed as well. He's talking about how global oil demand is expected to be strong, and growing demand and reducing inventories augur well for the refining industry as well over the next 12 to 18 odd months. Sajid Mangat, thanks for putting that into perspective. Remember, if you want to read more about this, it's there on our homepage. This story filed by Sajid Mangat is Mukesh Ambani hinting at taking his consumer businesses public. This is the story that you can read more about what the key takeaways from the Reliance Industries annual report. Well, moving on from only India to global stories, and then we'll come back to India, by the way. But America loves shrimp, and India is the world's largest exporter of these. But investors seem to have lost their appetite for shrimp companies this year. So what's bugging them, Somit? Because if the numbers are there, the market should have rewarded adequately. Clearly, that's not been the case.
So if you see year to date, the three shrimp related companies in India, that is Avanti Feeds, Waterbeast and Apex Frozen Food, have declined in the range of 28 to 47%. And to understand the reason behind this, first let's see what is the revenue source for these companies. So for Avanti Feeds, if you see, it is a shrimp feed manufacturer and a shrimp exporter, and the company generates nearly 80% of its revenue by selling shrimp feed, and the remaining it gets from exporting shrimps to countries like US and the European Union region, China, etc. Second is Waterbeast in the list. Now, this is primarily a shrimp feed manufacturer, and it has a very small exposure to shrimp exports. It generates nearly 95% of its revenue from selling shrimp feeds, and it gets around 4% of its revenue by exporting shrimp to countries. Lastly, it is the Apex Frozen Food. Now, this company generates 100% of its revenue by selling its shrimp in countries like US, UK, then there's European region, and then other parts. It's a 100% shrimp exporter. Now, the first concern that has been bugging these companies, that is the increase in the prices of raw material used to prepare shrimp feed. Now, soy meal and fish meal are the key raw materials used to make shrimp feed. And if you see the prices, now for soy meal, the prices have been consistently increasing, and it has increased around 61% 21%. While at a fish mill, after a sharp rise during the start of the year, it has come off a bit, but it is still 19% higher compared to the start. And now the prices of this key raw materials were largely stable in 2017. They were benefiting them, but as of now it has increased, and you can see how the increase in raw material prices have impacted the has increased the revenue, has impacted the cost of the company. Now the cost of raw material as a percentage of revenue has increased sharply in the fourth quarter because of rises in price. Now for Avanti Feeds, it has increased to 81%, while for water base it has increased to 86%, from average of around 70% for Avanti Feeds and around 60 to 65% for water base for the 9 months of FY18. So you can see how the increase in raw material prices have impacted. But there's more to this. Now these players are not being able to pass on this rise in raw material cost to the shrimp producers, because the prices of shrimp, that is the final product in this case here, has been falling. Now if you see, the prices of shrimp have fallen by around 10% from its peak of around $10.73 per kg to $9.56 per kg. Now this is the shrimp prices in US. Now that have fallen by around 10% from its peak. Now India farm gate prices of shrimp, now we don't have access to those prices, but according to reports, these prices have seen, the India farm gate prices have seen a sharper fall. They have fallen by around 30% in the last few months. Generally they trend in line with the international prices, but recently they have come off a bit. So these are the two concerns that have been worrying investors. First is the rising raw material prices, then the companies are not being able to pass on that because of that there will be impact on the margins of these companies, and also the falling shrimp prices will impact the aquaculture in India, and these are the two concerns. And lastly, there's the ASM list that the exchanges had put out. Now ASM is the additional surveillance measure, and the Apex Frozen Food and Water Base were a part of this list, which added to the sell-offs of these stocks recently.
So just wondering, did it show in quarter 4, Sumit, the kind of EBITDA margin contraction that would have happened for these companies?
So for Avanti Feeds, it did we did see a fall in their EBITDA margins, but for Water Base, it was largely stable at 12%, but for the first 2 quarters of FY18, it was around 16%, and in the last quarter, it came off to around 12%. But mainly for Avanti Feeds, we did see a sharp decline in their EBITDA margins in the fourth quarter.
It'll be interesting to see what happens in quarter 1 as well. Quarter 1.
Yes, it will be interesting. But the company have come out with clarification saying that the impact won't be that sharp, because they have been still there has been still demand for shrimp feed going on, and farmers are not going back with their shrimp, aquaculture. They are still producing more and more shrimps.
You just went to US, didn't you?
Yeah, I did.
Did you have a chance to consume any of the products that these guys export there?
No, I did not.
Okay, fair call, Sumit. Anyways, thanks a lot for joining in today and giving us that perspective. Well, for a lot of people who've been wondering as to why is it that these stocks have come off so rapidly. The last couple of days they've gone up as well, mind the way, Avanti Feeds in particular. But look at that. This year, the kind of falls that have happened, Apex Frozen, Avanti Feeds, Water Base, it's quite staggering, really. Let's wait and watch. Maybe there's some upside going ahead if the prices of the final product move up. Okay, but there is no such concern for listed luggage makers who are packing in the gains. VIP Industries, actually touching a new high in trade yesterday, and a lot of it's got to do with the humble backpack. Now you will wonder why I'm saying this. First, let me just give you a sense of the kind of returns that these stocks have given, not necessarily just YTD, but over the last 3, 5, 10 years. So VIP, the 10-year return 25 times, the 3-year return 3.5 times, and YTD, VIP has given returns of close to 25%. No wonder it's trading at fresh highs. Safari Industries, the peer, again the listed one, and there are a couple of unlisted players as well. The 10-year return 100 times, 3-year return 2.9 times, and YTD it stayed flat but not in the negative. That is Safari Industries. Now VIP, remember, the stock hit new highs in trade yesterday. Now, the key drivers, according to a lot of people, we've spoken to a bunch of people who are invested in these companies as well. Sumit Nagar spoke about this on Alpha Moguls as well. Aviation industry is in the value inflow stage. Ramdev Agarwal spoke about this yesterday, and baggage is a proxy on that, as well as tourism. It's a proxy for tourism industry, proxy for rising air traffic, and weddings are a big factor. Now, for all of us who might scoff at the fact that why is it that weddings, Dilip Piramal, when he spoke to Bloomberg Quinn on April 19, 2018, said that the first quarter of the financial year is always the strongest because of the demand generated by the peak wedding season. We may think that that may not be the case, but hey, here's the management of arguably one of the largest luggage makers in the country saying that the first quarter is strong because of this very reason. So while tourism and aviation may be factors throughout the year, quarter 1 of this financial year or every financial year is strong because of the wedding peak. And backpacks, you know, the reason why I said backpacks, it's the dark horse. There is a move from basic to branded backpacks. The organized backpack market, according to a lot of people, is growing at about 30 to 50%. The two-wheeler market is growing so well that people need smart-looking backpacks. That's the key driver. And I scanned through the con call of VIP Industries. They mentioned this as well in terms of the backpack. Let me come to that. On the con call, which on the results that came out about 10 days ago, the VIP management is on record saying that the current momentum is more structural in nature. They believe that the last such momentum was seen in 2010 and then way back in 1990. Remember, 2010 was a factor of also the currency, but the business momentum that they are seeing currently was last seen way back in 1990. It's about a 28-year peak in momentum that they are seeing. They believe that VIP can sell 1,000 times more backpacks from the current levels. The backpack sales have gone up. It's a low priced product, but the backpack sales have gone up. But when somebody asked them about whether backpacks can even grow materially on the higher base, the management is on record saying that they can sell 1,000 times more backpacks than what they have sold currently. And when quizzed about the outlook for FY19, they left it as being very good. They refused to put a number to this, but they didn't say that it was par for the course or it was going to be good. They mentioned that the outlook will be very good, but they'll leave it at that. So the numbers are showing the quarter was very good, the year was reasonably okay. The management of VIP, at least the one which is on record, is saying that the FY19 outlook will be more good. Well, no surprise that the stocks have done what they have done, and investors are bullish on these. Let's wait and watch if the stocks manage to scale further highs as well or no. VIP definitely touching new highs in trade yesterday. What is not doing that, unfortunately, is the next piece on first word, and that is Tata Motors. That's the one stock that's been on the losing end for the past few months now. Now, this is despite domestic business showing glimpses of a turnaround. Once its warhorse, which is Jaguar Land Rover, hit the rough spot, it just came off. Recently, with sales dropping and rising promotion costs thanks to the new launches. But their bets finally seem to be paying off with the sales rising last month. Let's ask Yatin about the trend on the fundamentals, and then Jayesh has also pulled out some charts from the Bloomberg terminal which hint at a possibility of a turnaround for the stock. But Yatin, to you first, has JLR managed to leave some of the hurdles behind?
Too early to say that, Neeraj. The sales have not picked up in the European markets and the Chinese market. Of course, there have been reasons for that. But let me take you to the JLR numbers which came yesterday. The total May JLR sales on the retail side are up 6.1%. The total sales came in at 48,281 units for the JLR entity. Land Rover and Jaguar, both of these sales were up 6.5%. So similar growth for both of Land Rover as well as the Jaguar brand. More importantly, if you look at the geographical breakup, UK has surprised, second time in a row. So the UK sales are up 21% for the month of May, a year-on-year basis. North America, which is the US market, strong momentum there as well. Sales were up 17%. But the problem point really is the European market, wherein there is some issue regarding diesel cars, especially in countries like Germany, wherein there are litigations and, courts involved in how really one needs to look at the diesel fuel and diesel cars. So the European sales were down 9% and the Chinese sales were down 8%. Of course, this is something that we'll be watching out for, because China has been historically a good market for JLR despite the headwinds, tailwinds, whatever you say, in the Western markets. But Tata Motors yesterday importantly clarified that because of the trade wars which is happening between the US, China, Europe, there is a chance that the duties on luxury cars might be tweaked. China has already announced that from 1st of July they will be reducing the import duties for luxury cars by 5 percentage points, and because of that there is a lot of postponement of buying that we can see, and probably that explains the reason why there is a 8% drop in the Chinese sales. But if you were to normalize the sentiment, the build-up that is there in the Chinese market, probably in the next few months all the sales could be compensated. So this is probably an aberration month, and probably that is the reason why the markets cheered the data point, and the stock ended 4% higher, or the 4% intraday move was seen yesterday in trade. So clearly, if you were to normalize the situation, because it is obvious that if you are buying a 50 lakh to 1 crore rupee value car, and if there is a 5 percentage point import duty that you think will surely come, and the date has been set by the government, you will always try to prepone that buying. So on the preponement, we think probably the data which looks average is probably slightly better. And once the duties are normalized, I think there will be a gush of buying which could come in the luxury car segment, especially for JLR. And mind you, in UK, I was just looking at the UK auto body website, and the sales for brands like Mercedes, BMW, all of them are down, and JLR has gained market share for the last 2-3 months. So that is also a positive sign, but I think Jayesh has something more interesting than what I have told right now.
Yeah, and then I want to get in one more perspective from you fundamentally as well, Yatin. But Jayesh, this was the fundamental piece, and I have one more question there, but what do the charts suggest? What does the Bloomberg terminal have to say about Tata Motors?
So Neeraj, first and foremost, if you analyze the long-term period charts of Tata Motors, a couple of interesting things have popped up from there. The first chart that you have on the screen is a maximum drawdown chart. Now, what you see on the chart over here is a weekly chart for 5 years. You can see that there was a peak at around 600 rupees in about 2015 and a low of less than 300 rupees. What the red dotted line is showing you is that there was a decline of 56% from this peak to this bottom, and that took about 53 weeks to decline. However, if you look at the recovery, which is the green dotted line, that has taken about 30 weeks. So the decline has led to from 53 weeks, and the upward movement recovered all of the losses in about 30 weeks. Where we are currently is this 56% is very close to where we are. So the maximum drawdown currently stands at about 53%. So, this is very close to the 5-year low that we have seen, and history shows a faster recovery when we have seen such a decline. But if you extend this timeline even more and move on to a monthly chart, there's an interesting pattern that comes up, which is called as the W pattern, or a double top, double bottom pattern. What you see on the red line, this is a monthly chart for 5 years. The red line, you can see that the letter W has been printed over here. These are the two tops that we have, and these are the double bottoms that we have over here in 2015-16. And if you extend this with a green horizontal channel, what you will see is that currently the price is very close to this double bottom. So in case this channel is respected, then historically we have seen that there could be a bounce back from these current levels as well.
Wow. Okay, and let's wait and watch what happens. Jayesh typically gets us the Bloomberg terminal inside on Bloomberg Edge at 8:50. Today maybe we'll hope for one more. But Jayesh, thanks for getting us that interesting chart. Just look at it. It almost seems a certainty, but let's wait and watch what happens there. Just before we end this piece, just want to drift back a bit towards the fundamentals. There's some survey or some dealer feedback that is coming in about some insurance angle that could aid Tata Motors as well. Jatin, is it possible?
Yeah. So the company Tata Motors has announced benefits of up to 1 lakh rupees on the passenger vehicles. This is basically they're providing the car insurance for 1 rupee. This drastically reduces your on-road cost, because typically, on a 4 lakh, 5 lakh rupee car, or a car of 10 lakh rupee, you usually pay insurance which is 25,000 to up to 40,000, depending on what plan do you choose. So, a 15,000-20,000 rupee benefit comes in there. And more importantly, what I can make from the release that the Tata Motors management has given is that they are also providing special bonuses on exchange. So if you were to exchange your cars, you would get a special bonus over and above the fair value of the car. So that also reduces the cost. So if you club all that, you can probably get a benefit of up to 1 lakh rupees is what Tata Motors has announced. And this also is valid for the new models, which is Tiago and Nexon. Probably this reduces the on-road cost of the car. We have seen this with Maruti. They are giving a similar kind of benefit on Ciaz. They're giving a similar benefit on Ignis. These are the two models which probably are slightly older and not doing well in the marketplace as compared to a Baleno or a Brezza. So probably this is a kind of marketing come promotion strategy wherein you are trying to equate your benefits to your competitor, to your largest competitor, and side by side also giving that on-road, kind of a benefit which works in terms of the consumer perspective and perception that, a 1 rupee insurance is something to have a look at a Tata car.
Wow, thanks a lot for that, Yatin. One consumer insight though, if you're buying a new car, try and not take the insurance from the car company. You can take it from an outside vendor. It turns out to be cheap, where I've just experienced it. But Yatin, thanks for putting that into perspective. That's all that we have on First Word today. Lots lined up on the show though. We talk about markets and the way ahead with Bhat of Dalton Capital Advisors. Will be joining us at about 9:15. Was the demand for air conditioners satisfactory in the peak months of April and May, or did the weather play spoil sport? We'll talk to Joint Managing Director B. Thiagarajan of Bluestar, and we'll discuss how V2 Retail is working to stay sleek and stylish with Director Akash Agarwal.
Welcome back. You're watching Indian Open with us on Bloomberg Quinn. Let's quickly do a check as to what's happening with the Asian markets currently, and it's not looking that great this Friday morning. Shanghai is down the most, I guess. Shanghai and Hang Seng, both of them are seeing cuts of nearly 1%. Nikkei is down just about 24%, but SGX Nifty, after two good sessions that the Indian markets have had, we're seeing some bit of cuts coming in. Not some bit, actually. SGX Nifty is suggesting a cut of over 60 points. And if one were to look at the data yesterday, remember, it was a day for the Bank Nifty weekly options expiry day, and we did see FIs unwinding a lot of their short positions. But let's get a better check on the entire universe, derivatives universe. Let's go across to Agam Vakil to find the same. Hi Agam, good morning. How are the Qs looking?
Good morning, Navneet. Over the past few days, what we saw was very little change in open interest for the Nifty futures. But yesterday was the day when we did see a substantial increase towards accumulation, towards longs, of course. As you can see, about 6% gain in the Nifty futures. In the Nifty bank futures too, we have seen the end of unwinding in positions and an addition towards open interest for the Nifty bank. Now, as one might expect, the VIX has moved up, despite the fact that the indices have also moved up, but this is essentially on the back of a lot of buying of options towards calls and puts, and that can lead to an expansion in premiums. And the put-call ratio also, as one might expect, has edged up higher at around 1.5. Now, in terms of the way things have panned out, yesterday we saw more writing in the 10,700 and 800 puts, considering we saw the Nifty move up higher. But when it comes to the overall picture and maximum open interest, that continues to remain with the 10,600 put on the lower end, which gives you a rough idea of what the range can be. And of course, 11,000 continues to be the one with the maximum open interest. That's the 11,000 call. Now, let's take a look at some of the stocks. We have United Breweries going from strength to strength at around 1,233 now. A lot of longs building in there. And Indian Bank was one of the unusual ones to show up to when it comes to longs building up with near 11% added in open interest. Voltas, on the other hand, continues to show volatility and was down with an increase of 11% in open interest. So some weakness coming through. But again, today all eyes will continue to be on the benchmark indices and the Nifty, whether or not it can defend the 10,700 mark today.
All right, many thanks for that, Agam. Now, before we move on to specific companies with our guests, it's time to just get in a quick perspective from the management of Time Technoplast. They've bagged an order worth 40 crores, not a very large one, but for the newly launched multi-layer pipes. To tell us more about the order win, Anil Jain, founder at Time Technoplast, joins us on the phone line. Mr. Jain, good having you. Thanks so much for joining in. Tell us about this order, and is this the first of the many that you could possibly receive?
Oh yes, it was actually a very special application. As you now the smart cities will require the cable and communication ducts to be the special pipes. So we designed this pipe. First order in that space has been finalized by the largest EPC company. And we have been able to bag this order. So you're right, actually, it's a small number, but it has a huge potential. But the necessary approval, it has to conform to the international standards because the Indian standards are in place right now. So we could meet those standards. This is right now about 175 kilometers, but we believe there's about 10,000 kilometer orders are in the pipeline, and we are aiming at
what
that.
Quantum? No, sorry, what's...
This is about 175 kilometers, but we are talking about the total, about 10,000 kilometers worth of orders are in the pipe. They will be finalized over a period of next 6 months or so.
Have you, Mr. Jain, have you bid for those orders? The current order is 175 kilometers. You're suggesting there are more orders which could come by for the next 10,000 kilometers is what you're suggesting. So have you bid for it all? If you could also just give us a sense, what's the current order book? What's the sort of guidance that you can give our viewers for FY19?
Okay, let me put it, this pipe is almost about 12% revenue. Under this segment, we do the pressure pipes and the pipes for switch, but this is a special application, so we developed that product. As to the bidding for this particular application, we normally do not supply anything to the government because the government is the ultimate buyer. So we supply to the contractors who in turn bid for the tenders with the government. So we tie up with them even before they bid for it. In this case, we have also tied up. Some of these orders have been live with the EPC contractor, and in turn we have to get the orders from them, and some of them still to be finalized by the government, and those EPC contractors who are in the we are tied up with them. So I think we will be able to participate in that inquiries that are coming in, but we do not expect to the government department. We'll be doing it only through the EPC contractors.
There's some talk, Mr. Jain, of you receiving orders from Dow Chemicals as well. Are you in talks with them, or have you received any order, a trial order at that?
You're talking about Dow?
Yes.
No, we are not doing anything with Dow. Now we're developing a product together with them, but no, we are not looking at any order.
Okay, but you're developing a product with them. Cool. One last question, Mr. Jain. What's the FY19 outlook? Revenue, bottom line? What's the kind of growth you're envisaging?
We should be doing upward of 15% as compared to 17-18. I think, you see, the last year did volume growth of about 16%. It could have been bigger, but the pipe business didn't do so well because our EPC contractor got stuck with the GST. So the pipe was going very rapidly last year. In 17-18, it didn't grow. So we have got very good order book in that segment, and we not only have to do better, but we have to make up for the last year as well. So all that put together, I think 15 is something that we should expect, definitely.
Okay, Mr. Jain, we'll leave it at that. Thanks so much for joining in today and giving us that perspective, and all the best for the year. Well, the size of the orders could be higher is what Time Technoplast is saying. It's a very volatile stock, but it was up about 9% yesterday. It's a small order, 40 crores, but they believe that there is chance for significantly more orders to come in for this company. Anyways, let's talk fundamentals. Before we get in our research team members, T.S. Harihar, founder and CEO at HRBV Client Solutions, joins us right now on the show. The fear seems to have dissipated a bit, Hari, but is it out of the window completely on the mid caps and small caps?
Not exactly. I think we need to look at them separately. If you look at the market as a whole, I would believe that the markets are happy that the rate hike was only 25 basis points and the outlook was not changed. In fact, the markets were worried that they could change the outlook from neutral to hawkish, which has not happened. So I think to that extent, the markets are happy. But I think the bigger worry for markets now is what's happening in the ECB. Because if the ECB winds down its liquidity program, and then we have seen Turkey hiking rates by 1.25%. So now we are seeing emerging markets in a hurry to hike rates. We are seeing, developed markets, the EU now trying to wind down its liquidity program. I think all this is going to weigh. And if you look at the SGX Nifty today, it's already down. And I think it's basically these liquidity worries that are weighing on the markets today. So I would believe 10,800, 10,900 could be a temporary kind of a resistance for the market.
Well, the focus also shifts to FOMC now, which is lined up next week. In case if we get a rate hike, which the market expectation is, do you see immediate outflow of funds from the emerging markets like India?
See, normally funds have flowed out. If you look at equity plus debt in the last 1 month, it's about $4.3 billion. And if you look at debt alone in the last 4 months, it's roughly about $6.2 billion. So I think funds outflow have happened, not that they haven't happened. It is just that the domestic flows have been so strong that we haven't really felt the FII fund outflows. See, I would believe that if the RBI maintains its stance that another 50 basis points we're going to hike the rates, I don't think fund outflows will be too much. If the RBI says 25 basis points done, that's it, then I think fund outflows could get actually a little sharper from here.
Are you even remotely bullish on Tata Motors, Hari? Just one quick question. I mean, yesterday the stock went up. Today we were doing some dissection on the charts. It's also looking very good. There are some JLR has gained some market share as well. Are you bullish?
See, Neeraj, I have traditionally liked the stock a lot, because there have been worries that it went from 340 to 300 to 280. But I still think there is a lot of value in this stock. No, I'm not saying it's going to go up in 3 months or 6 months. It's very hard to say. But then if you look at the JLR, if you look at the domestic business, okay, and then if you add up the fact that the entire Tata group is restructuring completely, there will be some amount of monetization of assets, some amount of realignment of assets. I think Tata Motors looks quite attractive. If you have a 1.5 years perspective, I would believe it's a great investment at this price.
Okay, remember, for viewers who missed what we did in the morning, there is a chart that Jayesh pulled up, a W support that comes in for Tata Motors. We'll talk to our technical experts about this as well. A fairly interesting chart. Let's see if it turns around the corner or no. What else? Aside of Tata Motors and some other stocks in news, we'll talk about all of those with our research team. In fact, Somit and Nikki both join me to talk about some key stocks in news and maybe what brokerages are saying about some mid-cap names, maybe some large-cap names as well. Both of you, good morning, as is the norm. Ladies first. Nikki, let's start off with you. What are the stocks in news? Are there some big ones?
Yeah, to begin with, if we are supposed to go with the order, the IIFL is expected to be in focus given that REIT has received certificate of registration from SEBI to conduct the real estate investment trust activities. Also, we are tracking Omix Autos this morning on back of the board giving an approval to double the capacity with an investment of around 100 and 120 odd crore over the next 2 to 3 years. IDFC could also, the parent IDFC also could be in focus given that UK CDC Group is expected to invest in IDFC Alternative. Now, this is a Mint exclusive that we are tracking. HDFC 2 is expected to be in focus. It's in talks to raise around $715 million through ECB. This is a ET exclusive. IRB Infra, importantly, given that HC has, the High Court has directed government to submit files pertaining to the inquiry, the discrete inquiry, in fact, which was held with regards to the Mumbai-Pune E-way toll. So that's one stock that we need to keep an eye out. Apart from that, we're also tracking Cochin Shipyard, where the defense panel, which is approved and plan of a 55 billion rupee for equipment purchase, has also approved a procurement of air cushion vehicles from the domestic shipyard. On back of that development, Cochin Shipyard might too just see a reaction. In terms of Baldi's, we are tracking Ashiana Housing and Shraddha Cropchem, where Goldman Sachs has sold in 2.8% stake in Ashiana and around 1.5% stake in Shraddha Cropchem. Also, Indoco Remedies, given that DSP BlackRock has sold in around 1.6% equity in the company for a sum of around 29 odd crore.
Okay, Nikki, thanks. That's a comprehensive list of all the stocks in news. Samit, what are you bringing for us?
So I have two brokerages, two interesting brokerages. One is Ventura Securities on Bike Hospitality. Now they have initiated coverage on the stock with a buy rating and a target price of 351, which suggests a potential upside of 106% over the next 24 to 30 months. Now the brokerage is expecting the hotel industry to report much better performance than what it did in the last 10 years, and Bike is well positioned to benefit from this uptrend in the hotel industry. Now the company's asset-led business model, strategic location of properties and adequate new capacities in the mid-scale segments are the positive that will be benefiting for the company going forward. Now, the company's asset-led business model will result into elevated return ratios going forward, and given the uptrend in the hotel industry, the brokerage is expecting the company's revenue to grow at a compounded annual growth rate of 22% over FY18 to FY21. And the company also has aggressive room expansion plans, and despite this, the brokerage is expecting the company's occupancy rate to increase to 71%. And because of this rise in occupancy rate, the company will report better operating operating leverage and higher margins going forward. Second we have is JP Morgan on Asian Paints. The brokerage has maintained its neutral rating with a target price of 1300. Now Asian Paints came out with its annual report, and the company says that the revenue growth outlook for financial year 2019 is positive, led by the healthy domestic demand, which will be aided by rural recovery and better performance expected from the overseas operation. Now major growth drivers for the company for the financial year 2019 includes expanded distribution reach, scale up of new retail segment, product innovation, and contribution from the new segments like waterproofing and home improvement. On the challenges side, the company is saying that the only challenge that they have for financial year 2019 is the rising crude oil prices. And lastly, the company is saying that in financial year 2018, their free cash flow and return ratios were moderated because of higher capital expenditure that the company had in financial year 2018.
Okay, Sumit, many thanks for putting that into perspective as well. Hari, just a quick word on the hotels and hospitality space. In the first 6 months or 9 odd months, they seem to have turned around the corner. This year, the stocks have just fallen off the cliff. Do you like anything?
See, I would believe that India Hotels and GVK Hotels of Hyderabad, I think they seem to be probably the best bets. And the good thing about the India Hotels is that a lot of the capital expenditure is completed now. I think what we will see in the next probably couple of years is the impact of all this capital expenditure coming back. So probably it will be an India Hotel and a GVK Hotel that we will be looking at the current levels.
Okay, that's the view in the hotel space. Remember yesterday, select hotel stocks with the likes of Taj, GVK, even Royal Orchid, they had seen some up move alongside EIH associated. We've spoken to a lot of these companies and they've suggested that the occupancy rates have been improving, and probably that was the reason why the stocks have been moving higher. Royal Orchid was up 9% yesterday. EIH saw gains of nearly 5%. Okay, SGX Nifty is suggesting a downtick of almost 70 points. Let's do a technical check. It's time for us to bring in our technical guest on board. Raja Venkatraman, Chief Technical Analyst at Chart Advice, joins us on the show now. Hi Raja, good morning to you.
Hi, good morning.
Thanks a lot for joining us today. What's the view on the markets? We've had 2 strong sessions, for Nifty, Bank Nifty. Broader markets too have been doing well after the carnage that one has seen. At current levels, keeping in mind SGX Nifty suggesting a downtick, would you take any trade in the opening session?
Yeah, I would agree with you on the rally which we have seen in the last 2 days. But if you recall, when we began the week, it was beginning on a promising note, considering the FI widening limit. But what really happened was otherwise. And that actually played a very big role in the market sentiment. And after that, the RBI rate increase also came in. So overall, the sentiment got a little punctured. Plus, what we saw was the positive response to the rate hike. So actually I've seen some short covering rather than some genuine buying which has come in. So right now if you see, Bank Nifty is around 38% weightage in the Nifty, and that is the financial services are going to play a catalyst role in taking the index higher. So if you summarize the analysis for the week, I would recommend that a move, it's actually Nifty is caught in a range. And if we don't obtain a closing about 10,850, we will not be actually seeing a much bounce in Nifty.
It's best to wait and watch at current levels?
Yeah, so it's best to adopt, I continue to retain the same approach, buy on dip and sell on rally approach. So if you recall the Nifty which came down to around 10,600, that's where you're seeing the option positions also getting built in. And 10,600 is 1/3 retracement of the entire leg which moved from the March lows to the recent highs. So I would recall 10,600 is a standoff point for the bulls. If it goes below that, the next drop is quite significant at 10,350, where there are a lot of confluences of supports, 350 to 380, where you have the 200 DMA, we have other Fibonacci levels also building in.
Right.
So one should actually adopt a buy on dip and sell on rally approach. That's why I have a 2-pronged strategy also on the stocks front.
And we'll get to that, but just a quick thought from Shrikant Chouhan. He's Vice President for Technical Research at Kotak Securities. Shrikant, what's your approach on the key indices today?
Good morning, everybody.
Good morning.
Neeraj, I think the way Nifty is spanning out and it is forming some pullback sort of formation. But if we see the broader formation, then it is forming some symmetrical or consolidation kind of formation, which is at the highest point of the current up move. So which is a little scary. But I'm of the view that the market is going to spend some more time between these levels, and strategy should be to look for buying if there is any fall in the market. I think yesterday the market was somewhere close to 10,820. From there now it is going to open somewhere around 10,720 or 700 levels. And I think with a very short-term perspective, with an intraday perspective, certainly we should look for creating some long positions close to these levels, 720, 715, with a final stop loss at 10,680. For Bank Nifty also, it was because of expiry of the previous week. It was down, but close to 26,200. Bank Nifty is having very good support. So with the same stop loss, if we get Bank Nifty very close to those levels, then 26,200 should be the stop loss for creating long positions in Bank Nifty.
Okay, that's the view on Nifty, Bank Nifty. Also remember yesterday in the last hour, we did see some bit of correction coming by, and finally the closing for both these frontline indices was off the day's high. Well, we'll get to the individual stock ideas, but it's 8:50, time for our special segment, and that's Bloomberg Edge, where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on the stock. Hi Jayesh, what's on your radar today?
Hi Navneet. So the Bloomberg terminal has in fact thrown up IRB infra for buying. A couple of reasons for this is that more than 60% of the analysts covering the stock have a buy rating, and the target price for on an aggregate basis is more than 20% above where the current price is. And with yesterday's close, what has happened is with heavy volume, it has in fact closed above the 21-day exponential moving average. Let's have a look at what exponential moving average is and what are the conditions that you have to watch out for. So it applies greater weightage to the recent data, and therefore it reacts faster to the recent price moves. It's also better suited for trending markets, because what it does is points you towards the direction of the trend, and in this case it's likely to be upwards because it's pointing that. So what you have on the chart is the last 6-month chart of IRB infra. The green line is the 21-day exponential moving average, and you can see as of yesterday's close, it has just managed to close above this green line, and the volume too was greater than the 5-day average volume. So a potential buy signal coming in for IRB infra as well.
Well in the past, Yash?
Yes, Neeraj, works relatively well. Over the next 10 days, the potential return could be about 3.5% on the stock.
Okay, in a volatile market and in a stock like this, let's wait and watch. The IRB might be under a bit of a cloud today. Let's wait and watch if that indeed happens. Jayesh, thanks for putting that into perspective. What about specific stocks? Raja, you mentioned about a two-pronged strategy on your stocks. What are the stocks you're recommending?
So I'm recommending a buy in Just Dial. After its good numbers, it's really seen a good up move. And what we witnessed a few days ago was just a pullback. And yesterday, it has again risen from a good moving average support. And what we feel is that it has got good potential to move towards 590 to 595. Yeah.
So Just Dial is a long call.
Just Dial is a long call.
What about the short call?
The short call is Adani Ports, and despite its rally which we are witnessing, there is a continuous resistance phase. There's a 50% Fibonacci retracement levels which are resisting over the recent leg, and yesterday too it has been declining. And if you see in the Nifty components, it's all actually on the negative side. So with the markets being negative today, I would recommend a short in Adani Ports. That's why I have a 1-by-1 sell strategy.
Okay, let's also ask Shrikant about his trading ideas for the day. Shrikant, what are you betting on?
Navneet, I would like to initiate long position on VIP Industries, which closed around 437 levels. And if we see the monthly pattern of this particular stock, then it is quite encouraging. It is forming reversal formation and comeback formation from lows. On daily basis also, the stock has made a new high yesterday, when other stocks are like just failing to maintain their immediate lows. So one thing is very clear, that there is a huge amount of inflows, and even if you see the volumes, then they are quite interesting. I'm of the view that it is heading for minimum 470, 475, and today if there is any lower opening close to 435, 432 levels, then I think it will be an opportunity for short-term traders to create long positions with a stop loss at 427. But if there is a medium to long-term view, then certainly at this price, it's a very strong bet to buy for. Apart from VIP industry, we also like Asian Paints, which close around 1290. And if you see the and go through with the all paint companies, then they are doing fairly well. Asian Paints, which is into monthly breakout, is heading for the levels of 1400, 1450 in next few weeks or few months. But at this price, yesterday there was a bounce back and reversal pattern. So with a final stop loss at 1270, if we create long position in Asian Paints, then I think it should do well, because 1330 is the next target to watch out for.
Okay, thanks for that, Shrikant. I'm going to take a leaf out of that. I was just talking about the luggage industry in first word as well. Hari, VIP or Safari, the returns have been staggering. I was rubbing my eyes when I saw that Safari has given returns of 100x in the last 10 years. You don't have too many companies. 100x. Wow. VIPs 25 times in the last 10 years. You know, that's no mean feat. Very few companies tend to do that. And they are still, you know, not terribly large companies. Hari, what do you do here?
No, they are not. Actually, you know, I have been saying that Safari seems to run up like, I would say in a very crazy manner in the last 10 years. But VIP, if you look at relatively, I think last 4 years, it has been a little subdued. VIP did see a big rally probably in the early part of 2000, mid-2000, but the last 5 years, it's been quite subdued. I think this is an industry that is growing. You know? You've seen growing tourism, growing, shifting towards the organized market. I think the biggest advantage that happened to companies like Safari and you know, VIP was that big shift towards the organized. And now with GST coming in, I think there's going to be a much greater shift. So the luggage industry used to typically be a 50-50, 50% organized and 50% unorganized. I think now it is going to get into 80-20 kind of a ratio. So that will be a big boost for all these companies. So I think if you are looking at buying luggage companies, VIP even at these levels looks to be a very good bet.
Concall was fairly optimistic from VIP for sure. Let's wait and watch if it reacts. Do you track First Source at all, Hari?
No.
You don't? The stock was at new highs yesterday, but that's the other interesting one which has been consistently hitting the charts.
Yep, and that's been one of the top performers among the Nifty 500 constituents. We were talking about this stock with Neeraj during the countdown show, and yesterday it ended 4% higher. But remember, for the year, it's almost nearly doubled actually for the year. Let's quickly talk about a couple of stocks which were doing well, and a lot of the steel makers from the likes of Tata Steel, which was your top gainer on Nifty yesterday. You also had Steel Authority that surged as much as 7% in yesterday's session. Raja, any trade that you see on any of these steel makers?
Among the steel makers, I would like to go in with JSW Steel.
That touched all-time high levels yesterday.
Yeah, that touched all-time high level too. And the reason is that it has been making higher highs, and the momentum has been consistent. And compared to other steel performers, it is definitely outperforming. So I would be a buyer in JSW Steel rather than Tata Steel or SAIL.
Okay. JSW Steel is looking good. Mr. Harihar, the realty pack, had a good session yesterday. You had Ramki Infra, which was locked in upper circuit. Something like Godrej Properties, that had a good session. In fact, the entire universe, Nifty Realty Index was the top sectoral gainer. Would you play this theme now? Because there are a lot of, market people who are betting on the theme.
See, I think you have to be a little selective. For example, the one you named, Godrej Properties, is a company that despite whatever happens in the industry, it is doing consistently well. If you look at the last 1 year, I think Godrej Properties has given about 60-70% return. So I think that is a very niche play. I think DLF is something a lot of people are overlooking. And I keep saying that here is a company that is finally getting out of debt. I think 2019 March, they have a target of becoming a zero debt company. They already monetized part of their assets through GIC of Singapore. And I think at 200, whatever the price it's quoting at right now, it seems to be a very good bet. So I think if you look at the realty pack per se, take very specific names like Godrej Properties, probably Shobha in the south, DLF in the north. I think if you look at very specific properties, I would believe that real estate companies could give good returns in the next 1 or 2 years.
Okay, let's see if that happens or not. But talking about real estate, remember affordable housing has been in focus, and we'll watch out for Ashiana Housing as Goldman Sachs yesterday sold nearly 2.8% stake in the company. We're going to get the pre-opening rates just in a while, and remember SGX Nifty was suggesting a downtick of nearly 60 points. It is still suggesting a downtick of nearly 60 points. 30 seconds to go for that one, but we'll be watching out for a lot of these companies which went up in yesterday's session from the likes of Realty, or for that matter, a couple of steel makers which were up and about. So Asian markets are still about trading lower. Remember, Shanghai and Hang Seng have seen more cuts from the time we started the show. So Shanghai is down over 1%. Hang Seng is down about 400 points. When we started the show, it was just down about 1%. So SGX Nifty now 10,709. Important to see whether today's closing can be above the mark of 10,700. Those are the initial pre-opening rates there on the screen, but remember they'll settle down by 9:08. Sensex still showing some bit of uptick in the pre-opening session. Let's do some check for the individual stocks. Pull up Tata Steel, which was the top gainer yesterday on Nifty, and see what is it doing right now in terms of individual stocks. Tata Steel is showing a downtick, but not too much. GAIL is the one which is leading the chart, at least in the pre-opening session, so that's up over 2%. L&T is showing an uptick. Something like Ultratech Cement, even HUL, remember, was up and about in yesterday's session. That's also doing well. HUL is showing an uptick in the opening session, but on the downside, you've got something like Bharti Infratel, some of the IT makers. Remember, IT stocks in US markets last night saw some bit of profit booking after touching all-time highs. Nasdaq was down. So HCL, Tech Mahindra are seeing. TCS2 is showing some bit of downtick, Neeraj.
Well, you know, you were talking about real estate names. They seem to be doing okay. Brigade, Unitech, a clutch of these names are starting off well. Dilip Buildcon is probably taking off from where it left off yesterday, so do watch out for that. Not too many stocks in news. Interested in seeing what maybe Bike Hospitality could be doing. It's a small cap name in which there has been a brokerage call, well, maybe a couple of percentage points higher. Let's wait and watch. And the likes of First Source and VIP, which were hitting fresh highs yesterday. Let's wait and watch what's happening to them. PSU banks, by the way, saw some long build-up. The likes of Indian Bank, Canara Bank, and let's see if those small ones are continuing in trade. Piyush Goyal is going to meet the heads of various PSU banks in order to discuss bank consolidation, but these could be very, very this could be things that could take a really long time. You don't quite know. As things stand right now in the first 1.5 minutes of trade, stocks like AkzoNobel, etc. are doing okay. Wakrangi is doing okay. They're going to consider taking some results, I think, on June 14. But select real estate names, names like Dilip Buildcon from amongst the construction space, Rain Industries. These are a few names that seem to be doing the rounds. Let's wait and watch. Any slam dunks? No, not really. 1% down, about 5%. Quality down another 5%. That's about it. The tea companies too, the likes of McLeod, etc., have all come off for the last few days and continue to do that. Lastly, just want to see, I mean, at least before we get back to our guests, what's happening to the currency and the bond markets. Let's pull them up. But the rupee, 67.53. That's a bit of a pinch. It's a sharp pullback in the rupee versus the dollar. This is a really, really big knock that we've seen in the last few days. There has been an uptrend during the policy day as well. Hardly any kind of moves, but today it's a big 40 paise down tick that has come into the rupee. The bond yields, which had hardened all the way to 8.
Well, we've touched the mark of 8% today.
So interesting. Let's wait and watch. This could set the cat amongst the pigeons if it does. Let's wait and watch what happens here. Watch out for NBFCs, by the way, in the session today as well. You know, getting back to some of these, I think the bond yields is probably the story, at least in terms of the records. I mean, we're almost there. So now we've crossed over that mark. We'll be bobbing between the red and the green right now. Let's wait and watch. But 8 seems to be the new normal currently. This is a far cry from what happened when the last policy was announced and we were headed back all the way to 710, 715. From there, it's been a one-way ride of sorts for the 10-year as well. You know, most NBFCs are shrugging it off, Hari. They're saying that, yes, there could be some rise, but nothing that we can't manage.
See, I don't think NBFCs are going to be really hit by this 25-50 basis points, because what we're estimating is that there could be another 50 basis points rate hike. So probably 75 is the best case scenario. So the kind of margins that most NBFCs operate, I don't think there should be much. And most of them, I think, will have the capacity to pass on. For example, if you look at a typical retail lender, I don't think passing on 75 basis is going to be very difficult. I think where it could hit is probably a lot of PSU banks who are sitting on fairly large amount of bonds. I think that could be one problem, but that is partially resolved because you can now spread your bond losses over 4 quarters. See, the problem I see is the state bonds, because I understand that there are about 6,500 crores of state bond losses that banks are sitting on, and the state bond yields are currently at 8.45%. And I was just watching your screen. 8% is where the central bonds are getting into. So state bonds are already 8.45. So state bonds is where I think there is some amount of losses hidden in the books of banks, and they could take another 6,000 crore hit in the next 2 or 3 quarters. So that is, I think, where there could be some problem. But NBFC is largely, I don't think there is much of an issue.
Will this be a new normal going ahead for the remainder of the year, Mr. Harihar, considering now, we are factoring in 3 more rate hikes from the FOMC, and also 25 or 50 bips more, let's say, from RBI? See,
I think 7.XX should be history. We should probably see 8 plus. So, whether 8, 8.25, 8.5, I think that should be the kind of a range that we should get into. I think if the Fed turns out too hawkish in its latest FOMC meet, I think we could settle around the 8.2, 8.25 mark. So maybe 8 to 8.5, I think that will be the new range, or a new normal that you can call it. I think that will be the new range as far as the central benchmark bonds are concerned.
Okay, let's wait and watch what's happened thereof. First 5 minutes of trade doesn't seem to be too bad or too good for any of the names. Asian Paints starting off lower. OMCs look like starting off lower. Actually, that's the interesting pack, isn't it? Shrikant, Chouhan, what are you doing with oil marketing companies?
See, for oil marketing companies, the view is very clear that they are into downtrend, and currently because of the extended sell-off in the short term and in the medium term, we are seeing some rebound from lows. But ideal strategy should be to create or to liquidate some long position if there is any, and it is better to shift into some other stocks, maybe in consumer discretionaries or in IT or pharma.
Okay, that's the view on OMCs. And Neeraj, I was just checking last time when the 10-year government bond yield touched the mark of 8% was way back in December 2014. So actually it's come off now after touching the mark of 8%. Let's see how the trading takes place throughout the session today. For both, rupee will also be in focus, and even the 10-year bond yields. But getting on to the individual pockets, Voltas, I guess, was a little weak yesterday, Raja, and I was just looking at the data. There were some fresh short positions being built up there. What's the chart suggesting?
Yeah, charts are definitely suggesting some weakness emerging, because even on the higher time frames, it's formed double top formation, and the breakdown on the higher time frames does not augur well for Voltas. And from the charts, we can clearly see a target of around say 450 to 425 as the potential target, and one should actually be looking to short Voltas at current levels also on rally, because the potential is quite high. So maybe to rally towards 550, 560 and at current levels.
At current levels as well, and on rallies, go out and short Voltas. Okay, gentlemen, stay on. Just need to get a quick perspective on the bonds as well. The currency too, by the way, is a sharp knock. K. Harihar of First Rand, I believe, is with us on the phone line. Hari, good morning. Many thanks for joining in. This is Neeraj here. It's not turning out to be really great a morning, though you could have said that it is part anticipated because there's hardly a move and we've nudged the 8% mark, but we have touched the 8% mark now on the bond yields. What next? What are your expectations?
I think clearly, as we ran into the credit policy, there was this little hope that there could be a pause, but with a signal of a rate hike in the coming months. But I think while the policy did say that it's a neutral stance, I think people looked at the nuances in the policy and the interview thereafter. And the takeaway clearly was that 4% inflation is still something that they're going to be monitoring very closely, and that they would take all measures to make sure that it comes below. And in that context, a 4.7% reading for the second half, even though it was lower than the reading for the first half, seemed to clearly suggest that 1 or 2 more hikes are clearly there in the second half of the year. So I think that spooked the market. Also, the markets were hoping that there'll be some announcement or some timetable or an intent on OMOs and liquidity infusion. And that was clarified that so long as call is at 6%, there may not be an immediate need to infuse any liquidity. I think these two factors have kind of spooked the market, and yields have gone up. Separately, of course, the fact that the state development loans have to be marked to market at actual prices I think that's also probably for those people who trade in state development loans and have been having that stock. I think for them, it's obviously a kind of bad news, though the defraying of the MTM over 4 quarters would have lessened the pain.
Hari, the concerns which were highlighted by RBI was rising crude prices, and Brent prices are still hovering around the 77 mark. The rupee has been depreciating, and RBI governor did request US Fed to slow down their pace of unwinding of the balance sheet. In fact, if that continues in the same pace that they have indicated, what sort of impact do you foresee for the Indian rupee and also on the bond yields?
I think in the Indian rupee, couple of factors have been the bigger one, other than, of course, the fact that the Fed is on the way to hike interest rates further, and the dollar index is, after having gone down slightly in the whole 94, 95 range. The bigger factor has also been the fact that the trade deficit has gone up, partly due to oil. And the second factor is that the FIs are no longer pumping in the kind of money they pumped in the last year. The last year they pumped in about 1,90,000 crores net. This year they pulled out close to about 30,000 crores in the first 5.5, 6 months. So is this going to continue? I think last year 2/3 of the money came into the bond market, and this time they've been pulling out money from the bond market. Not just because the carry is still worthwhile, but so long as they believe that the interest rates are going to go up, then they know that they will take mark-to-market knocks. And that is something that they would obviously not want. So I think the FIs will come back, but only after, we all realize that interest rate hikes have stopped. And from now, the interest rates will be neutral. At that time, probably you'll see the FI money coming in. Until then, the FIs will pull out. So the rupee will trade with a weakish range, but given the fact that the macros are looking very strong, I don't believe that it's going to weaken to the 2013 levels at all. But yes, a little bit of weakening is there on the cards, and people have been saying that the rupee is overvalued. Exporters have been asking for help. So a little bit of weakness by itself, I don't think is a cause for worry. The bond markets is, of course, a bigger cost of worry, because that would lead, if it stays like this, then MCLRs might go up and cost of borrowing may go up.
Certainly looks to be the case. Harihar, thank you so much for joining in and giving us this quick perspective. Much appreciate your time. Wow, bond yields probably a bigger worry, the currency not. So remember, a bit of a technical pullback in the rupee, any which is because of the HDFC Bank factor, all the way to 67. Now coming back to normalcy, 67.45 currently. The intermediate demand going away. Minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. Piyush Goyal will meet heads of various PSU banks to discuss the bank consolidation.
Oil price cuts continue as OMCs cut fuel prices for the 10th straight day. Petrol prices cut over 1 rupee in 10 days.
In bulk deals, PI Opportunities Fund and Pioneer Investment Fund buy stake in Future Retail.
Among companies meeting funds and analysts today include Thyrocare Technologies, Endurance Technologies, and also Shriram Transport.
Good news for bike hospitality. Ventura, as a brokerage house, sees upside of over 106% over the next 24 to 30 odd months.
And Goldman Sachs India Fund sells stake in Ashiana Housing and Sharda Cropchem.
Interesting. Okay, Hari, before we thank you, are you putting money to work right now? If so, where is it that you're doing that?
See, a couple of things. We are out of mid caps and small caps almost
completely.
Entirely. Yeah, because we took the decision about a couple of months back, and we've been telling all our clients to get out of mid caps completely. We would probably look at it at a lower level. Maybe if the Nifty comes down, let us say about 10,200, 10,250, we would look at mid caps a little more seriously. But for now, I think it's largely consumer goods. Our main focus right now is on consumer goods, and we like stocks like Hindustan Unilever, we like Marico, we like Dabur. So our focus right now is on these kind of stocks. We could look at aviation once we believe that the oil prices are kind of stabilizing around the 80, 85 levels. We would look at aviation a little more seriously. But right now, I think it's largely consumer goods that we're looking at.
Okay, Hari, we'll leave it at that. Many thanks for joining in today and giving us your perspective. Really appreciate your time. Aviation, well, Navneet, a lot of people bullish on the pack.
Yes, value migration, that's what you call it. But just 1 minute to go, so let's get you the top trading call from our technical experts. Raja, I'll come to you first. One top call.
Yeah, just dial.
Just dial, all right. And Shrikant, what about you?
I would like to go with VIP.
Okay, so it's just dial and VIP nearest the top calls from our technical experts.
If you allow me just one quick perspective on the Nifty Bank as well, maybe from Shrikant. Shrikant, Nifty Bank likely to start off about 0.25% lower. What will you do today?
For Bank Nifty, again, the view is same. Private banks are doing well. Yesterday, there was weakness because of expiry, and close to 26,200. Bank Nifty is having very good support. So close to 26,400, we should look for buying Bank Nifty to our trading portfolio.
Okay, watch out. Raja, if I can ask you for a 10-second answer, Bank Nifty, what would you do?
Bank Nifty, I would like to stay away because right now the trend is definitely a little negative. So I'd like to stay away from Bank Nifty.
Okay, so that's the call on the Nifty Bank as well. 15 seconds to go for the markets to kickstart trade. We'll start off lower. The question mark, I mean, the point is we'll not start off as low as the SGX was indicating, but let's see if we slide lower post that open. About 1/4% should be anticipated on the Nifty and the Nifty Bank and the Sensex too, of course. Yeah, and that's how we've started off, about 1/4%. Let's see if this worsens. Broader markets, they had outperformed meaningfully yesterday. Let's see if they are doing that. By the way, the Nifty is sliding slowly and lower. The broader markets, the mid-cap index start off in line with what the large caps have done. Let's see, maybe a larger tick of red on the heat map should come up on your screen. You probably have more red than green. Yeah, more red than green, hardly any green. This is an exact role reversal of how we started off yesterday. There were 6 or 7 losers yesterday, 6 or 7 gainers yesterday, no big gainers. The losers include the oil marketing companies. All 3 of them are down and out in the session today. Not out really, but down about a couple of percentage points. Asian Paints slightly weak. Remember, crude has inched up a little bit, at least the US crude did. What else? Eicher Motors marginally lower in trade. And banks, they're not the big losers, but clearly I don't see too many banks on the gaining list. In fact, not a single bank gaining. So that might be one more reason why that heavyweight banking space not gaining in trade today. Reliance not participating on the gains. It has been participating for the last 2 days. That gives you the picture. We're now down 0.5% for the Nifty Bank and about 0.4% for the Nifty. So there is a fair bit of red on the screen. Before I hand it over to Navneet, just 2 or 3 pockets that I want to highlight. Stocks which are either hitting highs or hit lows or are in news. Just 2 or 3 pockets really, not too many. But consolidation meet the PSU banks, which had seen some bit of long formation yesterday, especially Canara Bank and Indian Bank, are starting off on a weak footing, marginally off though, but still on a weak footing. What else? The stocks with near fresh highs included a VIP, of First Source and Grove Finance as well. But all 3 of them, with the market looking the way it is, are starting off very, very muted. Hardly any good news really at the broader end of the spectrum. Maybe Navneet has some more stocks, but just one more stock that I want to highlight, and that's Ventura's target over 100% upside they see in bike hospitality. That stock starts off about a couple of percentage points higher. Navneet, try as I may, can't really spot too many winners.
That's right, Neeraj, but I'll still start off with some of the winners. Kaplan Point, remember, this is the stock which didn't do too well last week, but we've seen some bit of recovery coming by. So in the morning session, it's up 8%. Remember, this is the 4th straight day of gains. Rain Industries, so a couple of these stocks which were under ASM from the likes of Rain and also Dilip Bilkon in the last 2-3 sessions have seen recovery coming about. Dilip Bilkon is also seeing some positive tick. GSFC is up 1.5%, and you've got something like UCO Bank that's seen gains of nearly 3%. United Bank is also up about 2% in the opening session. What's not doing well, and these are your usual suspects every day. So from the likes of Manpasand Beverages, that's down 5% in trade. Quality is down 5%. These are the lower circuit limit. Avanti Feeds, which was up yesterday almost 13 to 14%, has seen some bit of profit booking. That's also seen cuts of almost 2 to 3% in the opening session. A couple of stocks which are in news. So let's talk about them. IRB Infra, there was a report suggesting that government has filed a report for Mumbai-Pune e-way toll inquiry. So let's see how that one's reacting. IRB is down almost 1%. Pull up Ashiana Housing as Goldman Sachs fund had sold almost 2.8%. No major reaction. Shalda Cropchem is the other one where Goldman Sachs India fund sold nearly 1.5% stake. Shalda is also showing a downtick of nearly 0.6%. And a couple of gainers from yesterday's session. Let's see how they're doing. Granules was up 7%. Let's see if the momentum continues in the opening session today. No, that's down 2%. So maybe profit booking could be the theme today being Friday as well. And pull up Steel Authority, which was up 7% in yesterday's session. Steel Authority is seeing just just about the same level, 82.6. And I want to pull up DFM Foods. I think there are some positive ticks being suggested on that one as well today. So DFM is up almost 3.5%. And let's also do a check for the top trading ideas which came by. One of them was VIP and the other was Just Dial from Raja. So let's see how they have reacted in the opening session. VIP not doing too much, and let's check for Just Dial, which was quite active yesterday. That's down 1.5%, Neeraj.
Okay, Raja, opening thoughts before we thank you. Anything that you would want to make a point on? The Nifty Bank is down about 0.6%.
Correct. The Nifty Bank has a range of 26,000 to 27,000, and that's what the option positions are also indicating. And technically too, with the weakness setting in, I would still maintain my view that refrain from entering the indices today, and especially being the last day of the week. While stocks are definitely positive and Just Dial has come into very good support, and I would still recommend maintain the buy with the stop loss below today's low. Okay. Because the trend is still positive. Okay. And if one wants to do a negative, the short in Adani Ports is heading lower.
Okay, thanks.
You can do that.
So you can short Adani Ports, you're saying right now. Okay, great. Thanks a lot for that, Raja. So Adani Ports, I believe, is something that Raja Venkatraman believes is a strong short, and somebody can initiate a short at these levels as well. Raja, thanks a lot for joining in today and giving us your thoughts. Shrikant, what about you? Your opening thoughts? Any stock that pops up on your screen?
Neeraj, as we discussed, market somewhere close opened around 10,720, 725, and from there it is reversing. I am of the view that it is going to spend some more time between this 700 and 800 mark. So on Nifty, it's a buy. But for stock specific, apart from VIP and Asian Paints, we also like Cipla, because whenever there is uncertain kind of activity in the market, we saw activity in pharma or IT stocks, and pharma stocks are very close to their important supports. In this week, Cipla did well. I think it is very close to its support area of 535, 537. From there, it is reversing. So from here, I'm expecting Cipla to move towards 560, 565 in the near term, and we also like Torrent Pharma. So Cipla and Torrent Pharma, these two stocks, we should look for today's trading.
Okay, some buy calls coming in on these pharma stocks, and in terms of sectoral indices, what's doing well is the ID pack. Remember, rupee has depreciated. Even the Nifty Pharma Index has seen some positive ticks coming about. Shrikant, we leave it at that note. Thanks a lot for joining us today and taking us through your technical picks for today's trading session. Before we move on to our next guest, I just want to pull up the India Volatility Index. It's cooled off quite substantially. Remember, India VIX usually moves in an inverse direction with the market, but today it's down almost 6%. It's also trading around the levels of 12. Remember, most of the derivatives analysts, they watch out for the level of 12.5. Let's see if there is buying which can emerge from these lower levels or not. All right, moving on to our next guest, Mr. Bhat, Managing Director at Dalton Capital Advisors, joins us on the show now. Hi, Mr. Bhat. Good morning to you, and thanks a lot for coming to our studios. What has your reading been on the markets? There were a lot of events. We had the RBI policy. Next week is US Fed policy meeting. There was a carnage in the broader markets. What are you doing right now?
Well, I think one needs to be sort of braced for a sort of a trading range with the negative bias, because I think the India's domestic bit is doing reasonably all right, but it's only the external bit that there is some issue on account of oil prices and the rupee being a bit softer. But more importantly, I think the trade wars don't seem to be ending anytime soon. There's the G7 meet today, tomorrow, and I think it is not headed for a good ending. Plus, of course, you have the June 12th meeting with North Korea. That also can probably have some repercussions on the international markets, and therefore flows into India, which anyway have been negative for quite some time. So
when you say negative bias for markets, is it across the board, or do you foresee more selling for the broader markets?
Well, I think it will be some selling in the broader market for sure, but I think further pain for mid and small cap stocks, because they have run up much ahead of themselves for quite some time now. So I think that correction phase is going on.
Okay, that's the view coming in on the markets, but let's talk about the individual pockets then. What has been doing well in a weak market for 2018, so to say, it has been the ID pack, the consumer pack. Do you think these investment themes will continue to do well?
The consumer packs would probably continue to do well, because I mean the Indian domestic story, the GDP growth numbers are looking fine, and the economic activity, the level of economic activity is improved quite remarkably. So I think that, and the rural focus also is sort of giving some fillip to the consumer stocks, and I think that is something that will hold us in good stead, despite the market view being not all that rosy. On IT, I think it's just a reaction to the rupee weakness, but I don't think there is fundamentally any great change in their business model or the business prospects. Of course, the US is doing very well, but I think the growth numbers are not anywhere near where the valuation suggests they should be.
Yeah, it's not the same what one has seen historically, Mr. Bhat, but the sort of rally that one has seen so far in this year, are you saying it's only on back of rupee depreciation, or there has been some bit of improvement that one has seen in the numbers as well?
Quite largely on rupee depreciation, because on the growth numbers we have not seen any big sort of flip. It is still single-digit growth numbers, which are not going to take the valuation much further, or even the price to scale up dramatically from here. I think it's at a place where there will be probably some more time correction before it really can give us the next leg of up move.
Mr. Bhat, if the bonds or the yields stay where they are for the foreseeable future, or maybe edge higher, how would that impact your call, if it does, on the financials?
Financials, I don't think it is going to be a very huge negative, because there is not so much of market borrowing that these people do. So most banks depend on retail deposits, and retail deposit interest rates have not gone up so much. They're still available at 1.25% below the 10-year gilt. So therefore, I mean, they still have some margins, and even though there might be some impact on the investment portfolio, but that gives them, because of the MCLR regime, they can pass on increase in interest rates quite easily to the borrowers, and the repricing liabilities takes time. So therefore, I think they're in a good space as of now with this marginal increase in interest rates.
NBFCs?
NBFCs also, not too many of them depend largely on they depend on the banking system, not so much on retail deposits or on wholesale market borrowing. So therefore, I think, and they have sufficient margin, sufficient cushion for them to continue to do well despite this small increase in interest rates as far as the market is concerned.
Okay. The dichotomy, Mr. Bhat, to my mind, the last 2 or 3 months has been what's happened to auto sales versus what's happening to auto stocks. Now, is that a factor of the stocks having run so well in 2017 that there's a bit of a normalcy that is returning to them? Because everybody that we speak to is bullish on the auto space. Somehow it's not showing, save for an M&M and a couple of others, it's not showing in the performance of the auto stocks. The prime ones, the Marutis, the Ashok Leylands of the world, really haven't done anything noteworthy in the year to date.
There's always a valuation sort of glass ceiling.
That's what I was wanting to know.
There's a valuation glass ceiling. They have done well. I mean, for the last several quarters now, if you see, there have been talk about the economy not doing very well. Now, of course, it's turned around. So even at that time, it is auto numbers which are really giving some hope for the market. So therefore, they have done very well even during the time when the economy was not doing very well. So, but they continue to do well. But I think quite a lot of the good news is in the price. So therefore, you don't see that going every day up, going up every day. But I think that's a good space to be in.
Okay. Good space to put fresh money to work in as well?
Yeah, I think, I mean, there is a secular trend there, which is growth month over month.
No, but the market overhang doesn't bother you, is what I'm trying to get.
I mean, if you have to be in the market, even at these levels, then this is one place where you can probably...
Do you have to be in the market?
Not necessarily. At these interest rates, and with the sort of prospect of trade wars looming large, and with US interest rates going higher, I don't see you have to be compulsorily there in the market.
You can take a holiday.
You can take a holiday and relax.
The World Cup is starting.
Yes, I mean, it's a good holiday to take there.
Yeah.
Okay, talking about markets, and clearly IIT is the one which is doing well. The other pockets are down, but you've got Tata Elxsi, which is up 3%. NIT is up almost 2%. KPIT, Tech Mahindra, Hexaware, you name it, and all these IT companies are seeing some bit of buying coming in, at least in the opening session in today's trade. Mr. Bhat, what about the earnings growth? You know, last 3 years, we've not seen any major recovery coming by, and every year, you know, there are brokerages or analysts who are setting targets which get scaled lower quarter after quarter. What is your forecast for FY19? Can we see a meaningful double-digit recovery in earnings growth?
FY19, I think, barring sort of PSU banks and barring probably
That's
pharma,
very convenient. You remove one pocket and then you say, okay, it's going to be so much.
That is having a structural problem, so that needs to be addressed. So, I mean, it is actually spoiling the whole show, as it were. So, therefore, I think, I mean, there are pockets of good earnings growth elsewhere. I think, so therefore, I mean, anyway, the market is backing those pockets only.
Right.
But I think this is something that, I mean, when you have losses of 13,000-14,000 crores a quarter, some of these companies, so therefore, I don't think the market can factor that in in terms of market aggregate growth numbers.
So which sector will aid the earnings growth recovery?
Well, I think it will be private sector banks and NBFCs. They will continue to, auto numbers will be continue to be very good. So that will be another space where I think there will be consumer numbers continue to be good. So these are the sort of spaces where I think earnings growth would be fine. I mean, they are representative, probably more representative of the market today than the PSU banks. So the PSU banks really don't have growth capital. All the capital that the government has promised can probably cover losses. So therefore, I think they need a huge injection of capital for them to really perform. So therefore, that you have to keep it aside till the problem is solved.
Yeah, let it show in the print, and then you think about getting into these stocks, because otherwise it's just a brave call and nothing else.
Yeah.
One thought really. The last few days, there have been a couple of funds which have started a special healthcare thematic fund too. I think Mire made an app, has already launched it. ICICI Pru was in the throes of making an application, if I'm not wrong. A couple of other people are speaking about it as well. The Morgan Stanley analyst yesterday, when he was speaking to Darshan at the conference, was saying that he expects there to be some rationality to this space as well. 2 years out, 3 years out, 5 years out, I don't know how do you make your investments, but if that's how you look at it, is pharma a good bet?
Well, if you're a long-term investor, I think that is one place you can be, because all the problems they had with FDA and issues in the US market, it has to find some closure sometime. And I think we are very close to that, because these problems have been lingering for the last almost 2 years now. And I think, and quite a lot of them are not very major problems, something about packing and stuff like that. So I think these are problems that can be fixed. And I'm sure they're seized the problem, all these companies. And US market is too large for them to ignore. So therefore, you have to take a bet that they cannot really survive without the US market, and they will address the problem. So therefore, I think if you take that bet for a 3-year horizon, I think these are good bets.
Are you taking that bet?
Yeah, I think you should be there in that space.
In the pharma space as well.
Yeah.
Okay. Is it a hope trade, or is it a hope investment, or is it maybe a more realistic investment, taking in some calculated bets?
2 years ago, it was a hope investment, but now I think we're very near to the hope culminating to something positive.
What else besides pharma, where you think the valuations are now justifiable to,
Well, valuations are really difficult to justify. I mean, the only valuation that you can probably justify is that some hope on the PSU banks, and, the beaten down ones. You should assume that, if 2/3 of the market is not going to be able to finance the growth of this economy, something needs to be done.
Or hope investment there?
That's a hope investment. But I think you might not be very wrong on a 2 or 3 year view. The big ones, I think they should continue to finance the growth of the economy. Otherwise, the economy cannot grow. So the government has to do something.
Well, let's wait and watch. We have a management up next, Mr. Bhat. But one last question. I mean, it's an air conditioner manufacturer. Just wondering whether kind of spoiled the show for the air conditioner companies in the last quarter and maybe in this quarter as well. But are these primed for growth? Do you believe the value and the valuations that these companies are at provide a good bang for the buck opportunity, or is it wait on the sidelines for the time being?
Well, I think for the valuation viewpoint, it's wait on the sidelines. But I think this is a good sector to be in as far as the growth momentum is concerned. I think this is one area where I think the affordability has now sort of set in, and therefore every marginal buyer is probably the first time buyer. So therefore, I think there's a lot of growth there. But I think the market has gone ahead of itself in terms of valuation. So one could probably wait and watch if there's a correction thanks to trade wars and stuff like that. I think these are the spaces you have to be sort of keep your powder dry, as it were.
Interesting. We'll leave it at that, Mr. Bhat. Thank you so much for taking the time out and joining us, and have a great weekend.
Pleasure. Thank you.
All right. Well, on that note, we need to slip into a quick break. Not too much happening in the markets, to be honest, except for the Nifty Bank down about 0.75%. We're talking about the air conditioner manufacturers and that space. On the other side of the break, we speak about whether the demand for air conditioners will be impacted in the current month as well. The Joint Managing Director of Bluestar, Mr. B. Thiagarajan Johnson, to dwell in on that. And we also discuss how V2 Retail is working to stay sleek and stylish with Director Akash Agarwal. Welcome back. You're watching Indian Open on Bloomberg Quint. I must say the markets aren't doing all that well. The Nifty is down about 0.4, but the Nifty Bank is the real pain point. I don't know if it's got to do with the bond yields or otherwise, but 225 points lower. You could argue that the sentiment certainly gets dampened a little bit as a result of that 8% yield too, but 222 points down. And remember, this is down 222 points right now, and yesterday it came off about 0.5% from the highs of the day. So cumulatively, in 1 hour of trade, or less than 1 hour of trade, we've lost almost 1.5% on the Nifty Bank. That's a fairly steep correction that has come into this index. However, moving on to the corporate discussions, the much-awaited summer season proved to be a damp squib for the Indian air cooling solutions companies, not just the conditioner companies, even the air cooler companies posted this havoc in their sales. Bluestar reported subdued sales, mostly due to the unseasonal rains and changing weather patterns. Joining us now is the Joint Managing Director, Mr. B. Thiagarajan, who talks about whether this can correct itself in the months ahead. Mr. Thiagarajan, good morning. Many thanks for joining in. Now, I know, a lot of people make a lot of unseasonal rains in a quarter or in a year, but for a space that people almost started thinking of as having continuous sales and therefore valuations being assigned in the way valuations were assigned to the FMCG companies, this was a bit of an awakening that there are those rain gods which could come in and impact sales in a particular year.
Good morning. Thank you for talking to me. That's an interesting introduction. I have been in this profession for about 39 years. Indeed, there is evidence that there is climate change, unpredictable weather happens, but point number one I want to mention is weather forecasts have been becoming more accurate than in the past. And as far as this summer is concerned, there is something that has gone wrong. It is unfortunate that there was prediction that there will be heat wave, many records. It's not only Indian weather forecast, global weather forecast, US or Canada, Australia forecast revealed that there will be very high temperature conditions. It didn't take place. Now, second point is that while running the business, we won't look at the valuations at all. Valuation is an outcome. The market perceives something, market assigns the valuation. All that I can say is that the penetration levels in this country is very, very low, in the order of around 5%, and this is a category that is right at the top. More and more people would want to buy air conditioner now. So the market outlook for air conditioners have not gone in. Impulse purchase due to summer have not happened. It is perfectly fine. I would still maintain that given the penetration levels, given the consumer spending story that continues, as long as the GDP of this country is going to be somewhere around between 7 to 7.5%, I still believe the market for room air conditioner this year will grow by 10% at the end. Summer is bad. I don't think June is going to change the picture. Last year, due to GST, there were some problems, but still it was not as bad as this summer has been. So I think it will revive. It wouldn't be a negative growth in the rest of the year. So this is something unfortunate. We will have to deal with this.
No, certainly, and I started off with that particular point, Mr. Thiagarajan, because you as a company, you still, I believe, showed positive volume growth or revenue growth at least was up about 6%. For a lot of your peers, though, whether in the air cooling space or the air conditioner space, the cooling solutions business was completely haywire in the quarter gone by, and which is why that whole point about valuations. Having said that, just one quick update before we come to how is business for the year looking like. Has this quarter too, the April to June quarter thus far, been a bit of a lost opportunity because of the unseasonal rains?
I meant this quarter only. The quarter Jan to March was a fantastic quarter for us. I think many players also did well. But the April to June is not going to be good. But at the same time, I feel rest of the year, that is between July and March, the market will grow. At the end, we will end up with at least 10% growth in the market. The inventory levels will be one pressure that you will see. My rough estimate is the industry will have around 500,000 or 5 lakh number of units, which is 10% of the market size as an excess stock, which will translate into something like a 3 months of sales or so. So this will be something which also they will cope with, but the silver lining there will be, it would have been a lower cost material because subsequently exchange rate as well as commodity prices have gone up. So the prices anyway will have to go up from July 1. So it's a complex situation. Summer didn't go on well. There will be some excess inventory of 2 to 3 months. And the third is the prices will have to be taken up. The old inventory will be at a lower price. So I think people will not increase the price from July 1. They may shift it to August 1 or something like that. And only now the good monsoon and the festival season sales is the hope. This had happened 4 or 5 years ago, the summer being washed out. That point of a time it was north and west. Now it is south and east completely. The sales were down due to rains. West as well as north did reasonably well in May, and June also north should be doing somewhat better. This is, if you are going to be in this business, this is something one will have to deal with. The good news is the seasonal skew is slowly disappearing, not to our liking. So the festival season or the last quarter, January to March, also have been good quarters in the past. So we will look forward to that.
Saying the April to June skew is also disappearing?
It is not disappearing. It is what used to happen is that many years ago, May last week used to be the peak. It shifted to May middle. It shifted to May 1st being the peak. Now April 15th is kind of a peak. This year March was extremely good. See, the summer sets in and people would like to go and buy the units as soon as the summer comes in. But still the skew will be there, but it should not be to this extent. Over a period of time, if they are first-time buyers, it is, what happens is in India, color television is bought ahead of refrigerators. Similarly, four-wheeler is bought ahead of air conditioner. So air conditioner has been the last durable for many buyers. So if we take 10,000 buyers in the past 3 months, more than 40% of them had four-wheeler already. So it is the last purchase they end up buying air conditioners. So therefore, this is at the right time that many homes would like to buy. So they need not wait necessarily for summer. So the festival season share has been going up. Otherwise, during the winter time, there is no need for anyone to buy the air conditioners at all. But that is a welcome sign. Okay. So I'm making this point in order to justify that still the market can grow by 10%. It is not a washout year. That's all I'm saying.
No, 100%. I'm not saying that at all. I'm sure the revenue numbers will look okay. Just last couple of points. One is the raw material cost uptake. I think you referred to that in a bit. Would you... And you mentioned that people might delay the price hikes in order to thwart the raw material increases because of the inventory. Would you do a price hike in August as well, or would you do it in July? And two, do you believe that the margins will be maintained, or because of the raw material uptake, there is a chance that margins might slip a little bit?
Very, very likely that we may have to defer the decision to August 1 instead of July 1. We have not taken a call. It will depend on June sales primarily. And the margin, plus or minus 1% at the operating margin level is something that that is likely to be impacted. So I am not denying that at all. But I am also of the opinion that when the demand is down, the many component manufacturers will be also reducing the prices. So the future purchase, because like something like compressors and other components that go into air conditioners, they also will have to bring down the prices because they have a capacity to deliver. They had also planned for a higher sales volume growth, and therefore it should be something which we can look forward to.
Okay, one last question. Competition from Chinese makers. I believe a couple of them have already set up bases and are targeting some high sales. Will that be a cause of worry?
No, I have been indicating that the same question. If you look back for 10 to 12 years ago, when India opened up for the Koreans and Japanese, I think that benefited the Indian companies. I am of the opinion many Indian companies, including Bluestar, benefited from multinationals coming in. If the demand growth is going to be there, it will attract competition. So they are going to be there. And plus, in the new global scenario, people are worried about the tariff barriers. So Chinese will be rightly worried that they won't be able to export into India. Therefore, they will set up the manufacturing units. And we have to fight on our own strengths. Our plan is to do the backward integration, and we have cracked the technology. There is, whether it is inverter, whether it is VRF systems, we have invested heavily and we have broken it. For us, it is no longer a rocket science. We are mastering that. Therefore, we need to fight on the manufacturing competitiveness, distribution strength, and we will battle it out. You have seen, we are one among the top 5 companies. In many categories, we occupy number 1 position as an Indian company, which we feel proud of. I am certain that the new competition, the last ones to arrive are Chinese. We should be able to deal with that as well.
Okay, and we wish you all the best for that, Mr. Thiagarajan. Thank you so much for taking the time out and speaking with us today, and all the best for the quarter.
Thank you very much.
That's the management of Bluestar, hopeful of maybe some margin pressure, but hopeful of being able to thwart that with some price hikes later on in the year, in the second quarter, more like it. Now, be it winter or summer or monsoon, fashion never sleeps though. But the struggle to stay in vogue is real and the competition is cutthroat. So what does it really take to be one of the fastest growing fashion retailers in the country? And what would it take V2 Retail to move from where it is to where it can be? Let's find that out from Akash Agarwal. He's director at V2 Retail, joins us right now on the show. Akash, good having you. Thanks so much for joining in. You've come a long way from where you were to where you are. What's the projections for FY19?
Yeah, so currently we're operating 57 stores. We've opened 8 new stores this quarter, and we plan to open another 6 to 7 stores this month. And we should close the year at around 1.1 million square feet and a store count of 100 stores, and looking at a turnover of around 900 crores with an EBITDA margin of 10%.
Interesting. In various maybe calls or conversations with brokerages, you've spoken about the store count as likely to be about 125 odd by FY20. In million square feet, what do you expect FY20 to look like? And is there a change in the geographical patterns in where your expansions are taking place?
So the projections I'm giving you is for FY19. So we are looking to close FY19 and touch the 100 store mark by the end of this financial year. And by FY20, I think we should be able to open another 50 stores and reach the store count 150 stores.
Wow, that's interesting. What does that take your area under management to like? Because I must tell you, so FY19, I think most people, or at least the brokerages that we've read, are in line with the guidance that you're giving, Akash. But FY20, you're sounding a lot more ambitious right now than what people are factoring in. Where does that optimism come from? And I'm very happy for that, of course. But where does the optimism come from? And what would be I repeat my question, what would be the area under management for you if you indeed do manage about 150 by the end of FY20?
So the area under management by FY20 should be around 1.6 to 1.7 million square feet. And the optimism comes because we have 90 crores of cash on our books already, and we would do an EBITDA of around 90 crores this year. So I think we have ample capital for expansion, and it all depends on the execution. So if we feel that whatever stores we open this year and all the processes that we have defined is executed well, then I think shouldn't be a problem by growing at another 50% next year.
Okay. I reckon you wouldn't need to raise any kind of debt or even further equity fundraising to fund this expansion. Internal accruals and the cash on books should be enough to do this?
Yes, definitely. I feel that the cash on the books and the future EBITDA and the cash flows that we'll make should be enough for the expansion in the next 2 years. So we're not looking for any debt or equity expansion.
Interesting. What's happening? I mean, the one is the quantum of stores that a retail company would open. Second would be the change, or if there is a change, of course, but the change in the kind of products and the retail strategy that the company is adopting. Now, you guys have moved through the crests and the troughs in the last 10 odd years. How is the strategy right now different from what used to be? And what's the strategy for the next 2 years with this aggressive store count that you're talking about?
So a lot of our focus is on product development and private labels now. So currently my private label contribution is only 15% of the total business, and we're looking to take it up to at least 30-35% in the next 12 to 18 months. So that is one big area of focus. And obviously we are always trying to improve our assortment and the range assortment, the color assortment, the size standardization. So basically we are focusing a lot on product so that the customer gets the better offering, and that creates a differentiation from our competitors, because the competition intensity is increasing in the market. So we need to do something innovative and new to attract more customers. So I think the whole differentiation would be product driven, supported with good investment in technology and SOPs, processes, and investing in the right kind of people and getting the right kind of training in place so that everything is executed well. Because we're trying to build a base now on which we can do a growth of about 40 to 50% every year.
Yeah, and would all just tell me, would all of your growth, at least in terms of the store count, would come in areas where you are currently present and in and around there, or are you looking to expand into areas where you hitherto don't have any presence at all?
So we are expanding into new areas because in our future plans have that we should open around 1,000 stores in the next 5 years. So we need to be present all over the country. So we are experimenting with new regions. So we have finalized a store in the south, we finalized a store in Goa, we finalized a store in Jammu and Kashmir, and we finalized a store in Rajasthan. So we're going in all directions, and whichever region we are new in, we're approaching with a cluster-based approach so that it helps us with our logistics and our supply chain. But yes, there's no focus on a specific region. We're going on all 4 parts of the country.
Interesting. My final question really is on the profitability and 2, the return ratios. Now, the expectations across the analyst community is that both your EBITDA margins will scale up meaningfully. I mean, meaningfully for the kind of business that retail is. And to your return ratios, I think the expectations are that there will be a dramatic uptick in your return ratios come FY20, FY21. 1, would you believe that to be the case? And 2, if so, what would be the factors that would lead to that?
So as we have already built a base, we've hired a lot of new management personnel. So I think when we have a larger base and when we operate more retail area, so our costs should come down significantly, which should have a positive effect on our EBITDA margins. And talking about return ratios, again, I would say it's all about executing it well and the kind of sales per square feet that we get from our new stores. So we have a positive outlook, and if we meet our internal targets, I think we should be able to expand our EBITDA margin to 11%, which would lead to a better return ratio by FY20.
Okay. Great. Good having you, Akash. Thank you so much for taking the time out and speaking with us and giving us your thoughts. Remember, a clutch of brokerages are very bullish on this one. MK, for example, believes that the 12-month target price of MK is about 590. They believe there is a 54% upside or 50% upside, let's put it that way, to V2 retail from where it is currently. It anyways trades at a steep discount to its peers, and there is a likelihood of that discount narrowing over a period of time, which is why these guys are bullish. And the management commentary a lot more confident than what the analysts had penciled in as well. Do watch out for V2 retail. Interesting stock to monitor. What about the markets though? Are they as interesting to monitor? There's a bit of a pullback, I must say. Now, Pharma is really revving up the charts today. Sun Pharma up 3.5%. Dr. Reddy is about 2.7%. Cipla 2.5%. Lupin is about 2%. So there's strong move in Pharma, reasonably strong move in technology. Tech Mahindra, TCS, HCL Tech, all of them are in the green, which is actually a good sign. It's being thwarted by what's happening to banks. Predominantly, banks are the reason why the markets are languishing, and OMCs are looking slightly wobbly. Probably got to do with what's happening on the macro front with the currency, the bond yield. So banks, OMCs down, oil is up, so OMCs get impacted thereof, and IT and Pharma are getting some bit of an uptick out there. Infosys is trading at fresh life highs for itself. With that, it's a wrap on this leg of Indian Open. Thank you so much for watching. Up next is the FNO show. Do stay tuned to Bloomberg Quinn Live.